webinar. We have decided for this month meeting to, in fact, focus to something that it's rather new in terms of area of focus. Typically, our webinars focus on healthcare issues, and today we have been very lucky and honored to have an expert on digital transformation and AI, and in particular focusing on commodity and energy markets. His name is Matteo Masotti. He's responsible for communication in Enel, which is the major company in energy in Italy. His role is similar to Australian roles that are typically in the area of chief data scientist. In fact, Matteo has a background in physics and then studied computer science, IT, and management in his postgraduate education. He's clearly an expert in the field. He's been attending numerous conferences globally on this particular topic, and fundamentally, he has been very generous with us because it's midnight in Italy where he's connecting right now. So some information for people interacting with us today, live, either in live streaming or through YouTube and LinkedIn. The usual practice for interacting with us is to use for urgent question, you queue in our Q&A systems in the various platforms, or utilize fundamentally a bit of patience and wait until the end for raising your questions. So without further ado, I'd like Matteo to share his screen, introduce himself, and start the talk. Welcome, Matteo. Thanks.
Thank you very much. Hello, everybody. I'm going to share my screen. Please let me know if you can see it. And
very good. Yeah, we can. Yep.
Okay, amazing. So, hello everybody, and thanks thank you for joining us today. In particular, I would like to thank Professor Francesco Paolucci and the University of Newcastle for having invited me. Today, we are going to start by presenting the global various challenges that energy and commodity markets are facing that generate an impact on their stability and efficiency. So these challenges include, for instance, fluctuating prices, geopolitical tensions, supply and demand balances, regulatory changes, and environmental concerns, to name a few. The volatility in energy and commodity markets creates uncertainty for producers, consumers, and investors, affecting global economy and trade. So it necessitates effective risk management strategies and innovative approaches to address these challenges and ensure sustainable market operation. What I would like to cover then is how digital technology can support the business decision processes. So on the other hand, digital technologies have significantly transformed decision-making processes in energy commodity markets. For instance, advanced data analytics, machine learning, and artificial intelligence enable market participants to gather, process, and analyze vast amounts of information in real time. This in turn allows for better market forecasting, risk assessment, and optimized trading strategy. Additionally, digital platforms provide immense transparency, facilitating efficient transactions and reducing information asymmetry. And then, on the last point, I would like to complete this overview with a focus on a couple of elements that, in my opinion, have to be monitored over the time because can be like game changer elements. I am referring to quantum computing and generative AI. So quantum computing is interesting to me because with its ability to process a vast amount of data and perform complex calculations exponentially faster than classical computers offers opportunities for solving optimization problems that are prevalent in the energy and commodity market sector. These problems include, for example, for instance, portfolio optimization, supply chain management, energy grid optimization, and price forecasting. Quantum algorithm can help identify optimal strategies, reduce operational costs, and enhance risk management in these markets. So, generative AI, on the other hand, has the capability to create new and innovative solutions by mimicking human creativity. So, in the context of the energy and commodity markets, generative AI can be utilized to develop novel strategies, optimize energy production and consumption patterns, and design efficient supply chain networks. So it can generate synthetic data that can be used for market simulations and scenario analysis, leading to better decision-making risk assessment. So as I was mentioning before, by leveraging the power of quantum computing, generative AI, energy and commodity market participants can gain a competitive edge by unlocking insights, optimizing operations, and identifying opportunities. On top of the introduction from Professor Francesco Paolucci, let me briefly introduce myself. My name is Matteo Masotti. As mentioned by Professor Paolucci, I have a background in physics and a passion for data science in the energy sector. I have spent the past 15 years dedicating myself to leveraging data to drive innovation and efficiency in the industry. I have had the privilege of working with leading energy companies where I have developed extensive expertise in applying advanced analytics, machine learning, and artificial intelligence techniques to solve complex problems in the sector. So my experience spans various areas, including energy trading, of course, demand forecasting, and optimization of energy portfolios. Currently, I hold the position of head of the Competence Center in a global energy and commodity management. And in this role, I have the opportunity to lead a team of data scientists and data engineers, driving the development and implementation of data-driven solutions. Okay. So now let's start diving into the first part of the seminar. So energy is a vital input for all economic activities and everyday life. Modern economies globally rely on the extensive use of fossil fuels that is the main contributor to climate change. For this reason, energy markets are facing the long-term challenge of moving towards a net zero future. As you probably know, in past years, conditions in the energy market worldwide have been unprecedented, driven by COVID-19 and more recently by Russian full-scale invasion of Ukraine, shortages in supply and excess demand have led to record energy commodity prices, so the impact of which has been felt worldwide. high natural gas and electricity prices have had significant impacts on inflation, economic growth, living standards, and on policy goals such as decarbonization. So I mentioned net zero transition policy because it would imply a rapid shift away from fossil fuel dependence and towards clean energy sources like solar, wind, and hydroelectric power. With a rising competition and policy issues which need to be addressed by regulatory authorities and governments. So, after all that has been said, the question is how digital technology can support the business decision processes. So, advanced analytics are transforming the trading landscape. So, traders are deploying these tools as market become more time, a competitive advantage, and to maintain or increase like trading margins. They are able to do so because of increasing availability of market data, as well as satellites data, passive tracking, and weather data. And digital platforms have transformed the trading risk management processes. Online trading platforms and electronic marketplaces provide real-time access to prices information, enabling faster and more efficient trading. Algorithmic trading itself and automated risk management systems have also become prevalent, reducing human error and improving overall risk management. So basically, digital transformation has streamlined the supply chain in the energy and commodity markets through technology like the Internet of Things and blockchain, for instance. Companies can track and manage the movement of goods and resources more effectively. This improves transparency, reduces delays, and minimizes losses due to theft or spoilage. So, the rise of renewable energy sources such as solar, wind, mentioned before, has necessitated changes in energy trading. Digital technologies facilitate the seamless integration of renewable energy sources into the grid, enabling better forecasting, demand response, and optimization of energy trading strategy. So, other other crucial aspects that enable digital transformation to support the business processes are talent, skill, machine learning, and statistical algorithms, and obviously computing power, including cloud, that runs predictive analytics fast enough to identify market signals and then triggers trades. In my experience, like using advanced analytics, especially in volatile short-term markets, such as intraday power trading, can make the difference between profitability and risk to exposure of significant income shortfall. That's because humans cannot process data fast enough, like to make rational decisions, especially when large amounts of data must be dealt with and interpreted rapidly. So, for example, deployments of advanced analytics can lead to a reduction in costs by optimizing bidding or renewable assets in the day ahead and intraday markets. At the same time, a productivity gain in intraday trading can be achieved as a result of employing an end-to-end automated process using advanced analytics engines. So, as part of this transformation, the role of traders progressively shifted from taking decisions and executing trades towards focusing on market analysis and improving advanced analytics model on a continual basis. So, and what I think is that a successful analytic transformation in trading includes making business value explicit for each use case and clarifying performance expectations. So, after having discussed about the main changes, challenges, and benefits so that digital transformation is bringing to energy commodity market. So I would like to talk on two topics that are bringing, in my opinion, further innovation into the sector. So I'm referring to quantum computing and generative AI. So, okay, this is like what I say, like basically some AI use cases that you can can develop in the sector. I mentioned this use case in the previous slides. So, and going to the quantum computing. Quantum computing is a field of study and the technology that leverage basically principles of quantum mechanics to process and manipulate information. So, unlike classical computers, which use bits to represent information as either zeros or ones, quantum computers use quantum bits or qubits. So, qubits can exist in superposition, meaning that they can represent both 0 and 1 simultaneously, and basically allowing for parallel computation, and thus making complex calculations and solving problems that are intractable basically for classical computing. So, in other words, quantum computers leverage quantum mechanical phenomena to manipulate information by relying on quantum bits or qubits. So, quantum computing, at the end of the day, provides exponential power, mathematically challenging problems, improving accuracy, shortening computational runtime. I highlight this fact because in my experience, so the shortening of the computational runtime is as important as an accuracy improvement. And basically, quantum computing has a potential to significantly enhance computational power, enable breakthroughs in areas such as cryptography, optimization, as mentioned before, material science, and obviously drug discovery. So, in terms of maturity, quantum computing is considered an area of active research and development, and is not yet mature enough to be widely adopted for general purpose computing. So, however, significant advancements have been made in recent years, and several fundamental concepts and technologies have been demonstrated. Once quantum computers have demonstrated their potential, there are still many challenges to overcome in this field. Because quantum systems are fragile and susceptible to errors due to environmental noise. So, for example, scaling up the number of qubits, the basic units of quantum information, while maintaining low error rates, remain a significant challenge. However, with ongoing research and technological advancements in the field of quantum computing is progressing rapidly. So, on the other hand, I would like to discuss also another branch of the optimization that involves the concept of quantum-inspired computing. So, quantum-inspired computing refers to the use of classical computers to simulate or mimic certain aspects of quantum computing. So, although not as powerful as true quantum computers, quantum-inspired computing algorithms can provide approximate solutions to complex problems that resemble those solved by quantum computers. So, quantum-inspired computing is a field that combines classical computing techniques with some principles from quantum computing. So, while true quantum computers leverage principles of quantum mechanics to perform computation using qubits, quantum-inspired computing seeks to harness certain aspects of quantum computing algorithms and concepts using classical algorithms. So, quantum-inspired computing is often employed as an intermediate step towards achieving practical quantum computing, or as an alternative approach to solving a complex computational problem that are computationally expensive for classical computing. So, quantum-inspired computing is, as well as quantum pure computing, an active area of research and development, and it holds promise for tackling computational challenging problems that are beyond the reach of classical computing alone. By incorporating quantum-inspired techniques into classical hardware, researchers aim to achieve improved computational performance and find novel solutions to optimization, machine learning, and other complex problems. So, it's important to note that while quantum-inspired computing can provide benefits in certain cases, it does not offer the full advantages of true quantum computing, such as exponential speedup for a wider range of problems. However, it serves as a bridge between classical and quantum computing, basically offering a practical and accessible way to explore quantum computing concepts and algorithms. So, okay. So, I would like to provide a few examples of the principal quantum computing providers that nowadays are available on the market. So these are, there are also other companies, startups, and research institutions around the world that are actively contributing to the developments of quantum computing technology. So the field, as you can expect, as you can understand, is rapidly evolving, and we can expect more players to emerge as the technology matures. So, just to name a few, IBM has been a pioneer in the field of quantum computing and offers access to quantum processor through IBM Quantum Experience. So they have developed a series of quantum computers ranging from small-scale systems to more powerful devices with increasing qubit counts. Google, on their side, has made significant contributions to quantum computing in the last period. So particularly with their achievement of quantum supremacy. So they continue to research and develop quantum technology through their quantum AI division. Also, Microsoft is investing in quantum computing research and development. They have developed a programming language, a specific programming language called Q#, and are working on building a scalable quantum computer architecture. So on the other side, IonQ is a company that focuses on trapped ion quantum computing. That is another technique, a novel technique. So they are working on building quantum computers based on trapped ions and offer cloud-based access to their system. And then there is VheP. VheP is a Canadian company. Basically, VheP quantum computers are based on a technology different from the others that is called quantum annealing, which uses quantum effects to find the lowest energy state or the best solution of a given problem. So the company has been able to build and scale up quantum processor with increasing number of qubits, offering their system to researchers, organizations, institutions, and private companies. I had a couple of experience like using the VheP facility. So focus on energy and commodity management. So quantum computing, we said that with its ability to process vast amounts of data and perform complex calculations exponentially faster than classical computers, offers opportunities.
Matteo, sorry to interrupt, Matteo.
Yeah.
There is a bit of trouble. There is a little bit of trouble to hearing you with the headphones. Can you maybe find switch them off and use the computer? Or
now can you hear me?
Yes.
Can you hear me better?
Yes.
Is it fine now? Okay.
Yes.
Okay. So I was mentioning, I was talking about the focus of quantum computing on like practical energy and commodity management use cases. So I was mentioning the fact that quantum computing, with its ability to process like a large amount of data, is very good, offers really good opportunities for solving optimization problems that are prevalent in the energy and commodity sectors. So these problems are almost the same that I mentioned in the previous slides. So is like portfolio optimization, supply chain management, energy grid optimization, and for example, price forecasting. So quantum algorithms can help identify also optimal strategies, reduce operational costs, and enhance risk management in this market. So in my recent experience with quantum and quantum-inspired approaches, the need from the traders and the energy managers was not to perform a better optimization in terms of accuracy. Obviously, they were happy to have like an optimization model that performed better in terms of accuracy, but to do faster than classical computers. So to perform runtime, okay, in a faster way than classical computers do. This is due to the fact that performing multiple runtimes over the same problem, over slightly different scenarios, using an ensemble approach or sensitivity analysis, as energy managers usually refers to it, enable to take a business decision that is based not over one single outcome, but over multiple outcomes, having also an optimization confidence interval. This to say that in my experience, as I just mentioned, runtime reduction provided by quantum approaches or quantum-inspired approaches is as important as accuracy optimization in case. So, applying emerging quantum technology to financial problems, particularly those dealing with uncertainty and constraint optimization, should also prove hugely advantages for first movers. Like, imagine being able to make calculations that reveal dynamic arbitrage possibilities that competitors are unable to see. So beyond that, a faster reaction to market volatility are one of the specific benefits I expect quantum computing to deliver, okay? So, but what gives quantum computer this enormous advantage? I try to keep it simple. So the solution space of a quantum computer is orders of magnitude larger than traditional computers, even immensely powerful ones. Okay? That's because doubling the power of a classical computers requires about double the number of transistors working on a problem. The power of a quantum computer can be approximately double each time only one qubit is added. Obviously, the challenge here is to add more qubits by keeping the system stable in order to run, as I mentioned before. So, and this is well, basically the overview I would like to provide you about quantum approaches, quantum inspired approaches, and there is also another branch of quantum computing that is like hybrid quantum. The hybrid quantum is basically to perform some kind of operation on classical computer and then leave the rest of the computation to a quantum pure machine. Okay. So, but now I would like to switch to the very last like topic of this presentation. So, generative AI. So I know that is not an easy task to talk about generative AI and large language model nowadays, because the hype is extremely high and everyone is talking about it. So the updates I receive on this topic are on a weekly basis, and the portfolio of players involved in generative AI is keep increasing. So I am trying to share with you my latest updates on the situation, always keeping an eye on the energy and commodity sector application. Okay, so very briefly, generative AI and large language model (LLMs) are, let me say, fascinating areas of artificial intelligence that have gained significant attention and made notable advancements in the recent years, I would say, like in the recent months as well. So generative AI refers to the field of artificial intelligence that focuses on creating models capable of generating new and original content, such as images, music, or text. So these models are designed to learn patterns from existing data and then generate new instances that resemble the original data, okay? So large language model in particular are a subset of generative AI that specifically focuses on generating human-like text. So these models are trained on vast amount of textual data, so like Wikipedia and so on and so forth. So to understand the structure, the grammar, and the semantics of language. So they learn to predict the probability. This is really important. They learn to predict the probability of a word or a sequence of words based on the context provided by the preceding text, okay? This understanding allows them to generate coherent and contextually relevant text. So one example, one of the most like famous example for a large language model is GPT 3.5 or GPT, let me say, which stand for Generative Pre-trained Transformer 3.5 is the version number. On March 2023, OpenAI released GPT-4, okay? But the prefix means Generative Pre-trained Transformer. It is an advanced language model developed by OpenAI, and it builds upon the previous iteration to provide more accurate and context-aware responses. So GPT 3.5 or GPT is trained on an enormous corpus of text, allowing it to understand and generate text across a wide range of topics and styles. Language model, I would say the vast majority of language model nowadays like operate by leveraging a neural network architecture called transformer. This is generative pre-trained transformer. Transformers are specifically designed to handle sequential data, such as text, by processing it in parallel, basically capturing long-range dependency effectively. So these transformers enable the model to generate text that not only follows the grammatical rules of the language, but also, I would say, most of the time exhibits coherence and relevance, okay? So large language model on pre-trained transformer neural network that from now on I call a large language model can be used in a variety of applications, including chatbots, content generation, language translation, text compression, and much more. So its versatility stems from its ability to understand and generate text in a natural and human-like manner. However, it's important to note that while this large language model can generate impressive text, it does not possess true understanding or consciousness. Okay, so this is something that has to be always took in mind when we leverage on the outcome from these large language models. So we need in advance to understand a little bit of the topic we prompt in the large language model, because it's not always true that the large language model provide basically understand and is conscious about the meaning of the content that it generates, okay? It relies solely on patterns learned from training data and basically lacks real-world experience or common sense reasoning, okay? So I think that as you all know, to use a large language models, basically developers provide a prompt or initial text, and the model generates a response based on the context and patterns it has learned. Okay, the generated response can be further refined or fine-tuned to meet specific requirement or desired outcomes. So I will cover this sentence later on, because in my opinion, like or in my opinion, in my experience in the field of energy and commodity market, large language model nowadays are too much general purpose. So a more specific, a more fine-tuned large language model based on financial information, on energy market information, would be beneficial for traders and energy managers. So, as I mentioned before, GPT is not the only large language model in use. So during the last month, this is just a schema I show you. During the last month, several providers have presented their large language model. Almost the vast majority of them are based, as I mentioned before, on transformer neural network. This is like an overview. This is my vision, okay, updated at the 8th of June. You can see here we have like the major like players like OpenAI, that is owned by Microsoft. Meta is developing and tuning his own large language model. Hugging Face is a really promising open source large language model. And then there is NVIDIA, Databricks, obviously Google. Initially, Google is not available. I mean, the large language model provided by Google, Bard, is not yet available. So I haven't had the chance yet to test it. But as you can see, there are the major like software company, I mean, Microsoft, Meta, Google, Amazon, and some other like big players like NVIDIA, Databricks, and AI21. Okay, this is as you can see here. So I don't want to stay too much on this table, because I can talk about like on this table for ages. So as you can see here, the number of parameters, so the weight of the model, change a lot from one company to the other. Basically, this means that there is a lot of experimental activity, okay? Because big model, I mean model trained on a large like corpus or knowledge base, or with a lot of parameter, they don't specifically perform better than like lightweight models, okay? So this is just a view I would like to share with you about the situation, about the large language model situation nowadays. So just to complete my speech, I would like to make a very like brief focus on the energy and commodity sector, possible application of large language models. Obviously, like financial analysis and forecasting. Like by learning from historical financial data, generative AI models can capture complex patterns and relationship in the data, enabling them to make predictive analytics about like future trends, asset prices, and economic indicators. Another like use case, another application could be like financial question answering. For example, by leveraging its understanding of human language patterns and its ability to generate coherent, contextually relevant responses, generative AI can provide accurate and detailed answers to financial questions posed by the user. So one clear example of this is the Bloomberg GPT. Is a large language model like specified I say, like fine-tuned, as we say, on on all the knowledge base about finance that Bloomberg gained in the last 15 years. And so this is, to me, this is a very promising large language model for the energy and commodity market sector. I would like to leave you with this last focus on other players like JP Morgan for banking, and I leave also the link, if you are interested, to the paper that Bloomberg released a couple of months ago, if I'm not wrong, it was March 2023, about Bloomberg GPT. It's really interesting to understand how they mix them, like public information, for example, from Wikipedia, okay, to private information from Bloomberg, okay, in order to basically generate a model, a large language model that is balanced between the public information that it can elaborate and on the other side, only the financial ones. So I think, okay, I have completed. So just to make one last comment on this last chart. To me, I am very interested in a certain way to test both JP Morgan and Bloomberg GPT services, because I think that the knowledge base they have and they have used in training this large language model could be very, very beneficial for the traders and for the energy managers. So thank you for the attention.
Thank you, Matteo. So very interesting presentation. Starting with some questions. We don't have much time, and of course, for those who are live and also on Zoom, please use the appropriate boxes to ask the question. So from the live channels, basically, the first question is about, you talked, so to frame it a little bit, you talked a bit about the impact, but it's not clear for this attendee. What do you mean in terms of what are the costs associated to the digital transformation? Human costs, social costs, and even in terms of actually energy-related costs to allow for these types of transitions. Whether there is any prediction on the cost side. The emphasis seems to be often, or more often, on the benefits of the transformation. So, is there any comment that you have on that?
Yeah. This is a very thank you for the questions, because yeah, I focused a lot on the benefit that there is a rising branch of digital transformation that is called digital sustainability. Okay, so we at Enel, but we are not alone. So we start measuring and defining some performance indicator in order to understand the impact, okay, of all these initiatives. For example, moving bare metal to the cloud, okay, in a certain way, contributed to reducing some CO2 emission, okay? But at the same time, another aspect that is very important is how people use this technology. I mean, leveraging on, for example, in the artificial intelligence model development, okay, the size of the data, of the historical data, okay, that we use has a big impact on the energy we use in training the model itself. The numbers of time we retrain the model has an impact on the we use like CO2 emissions, but is not the only parameter we take into account. So the cloud in a certain way freed everyone, like at the beginning, by thinking about like the footprint impacts, okay, the CO2 footprint. But now there are like several initiatives in order to keep trace of the digital impact, and on the other way, on like moving to a more sustainable digital transformation. So I don't know if I answer the question.
Oh, that's fine. Another question relates more, I suppose, to the last part of your presentation, ChatGPT and the like, and it refers to the ability of our regulatory frameworks, nationally, internationally, in dealing with the challenges that these types of systems fundamentally bring about in terms of data protection, privacy, and utilization of information, whether that's structured or unstructured. So that are probably, I'm trying to summarize by reading, there is a long comment. But yeah, fundamentally, it's what is your take on the ability of governments to actually keep up with the data protection standards at the national and international level, given the use of information that is made by these new systems or AI in general, but new system seems to accelerate this agenda.
Yeah, this is like a very hot topic. If I am not wrong, just yesterday, UE like issued a first like AI, Artificial Intelligence Act, that is the first step in order to regulate a little bit generative AI models, but in general, artificial intelligence model in terms of privacy and regulatory like constraints. So I can provide you with a practical suggestion, with a practical tips. So coming back to this chart, okay? So if every company, every institution has some like privacy problem, okay? So how I would face this kind of problem? I would face this kind of problem by internalizing as much as possible the model, the large language model I would like to use. So what I'm saying is, if I run, okay, on my machines, okay, the large language model, okay, I am more safe of not providing on some third-party actor my internal, my like my privacy data. So but this is like an approach, this is like a practical approach. What I expect on a global level is to maybe find different frameworks, okay, regulatory frameworks, as the one that UE has just issued, in order to regulate a little bit because obviously I won't put any of my personal information on any of these large language models, because I have no control of my personal information, how they are going to be used.
Thank you. I think there are a few other ones, but for reasons of time, because we're really pushing, probably there is space for one more. And I'm gonna just go through a couple, maybe this one, yeah. So there is one that refers to supply chain. That refers to supply chain. You were talking about it probably in the initial part of your presentation. Can you make a connection a little bit on? It seems to refer to the COVID crisis and the rapid increase in digital instruments to overcome it. So this question relates to the substantial part, I guess, of supply chain and the fact that it's still struggling despite the digital push. Is there any relation between or impact between investing a lot on digitalizing and maybe rather than investing on strengthening the infrastructure that collapsed during COVID, or these are completely separate issues, given that we're still struggling with the supply chain problems globally?
No, I think that they go together. They go together because obviously the most we digitalize any kind of process, okay, it can be like supply chain, it can be like grid optimization, it can be like any kind of energy management or commodity trading processes, okay. But for example, all the physical processes, okay, and I switch from the energy market, I move to the generation, okay, or to the distribution that is more physical, okay. So you can push as much as you can on the digitization of these assets, okay. But at the same time, okay, you need to work on your infrastructure. So you need to like update at the same pace and at the same time also the infrastructure that enables you to like supply goods or maybe to supply energy or to generate energy, okay. Or on the other side, you can use digitization in order to enhance the efficiency of your process. I make an example. I make like an example with the generation, okay. So you can have like a generation fleet, okay, and you can invest in digitization in order to enhance the efficiency of your fleet. I mean, by like developing predictive maintenance algorithm and data product, you can maintain less frequently your asset, and at the same time you basically save money because you maintain the same level of reliability and availability of the asset at a lower cost. So it's always digital and physical for the physical process. Energy market and commodity is slightly different because we don't have anything physical. Is only data, is only numbers. Okay, I don't know if I.
I think that's fine. That's very clear. So, Matteo, many thanks for making this contribution and also for making a late hour for you. I think it's 1 a.m. in Rome. So thanks so much. We really appreciate this. And for all those of you listening here on Zoom or live, thanks for joining us. And we will definitely post this as well, so you can use it and distribute it freely on our website. And stay tuned for our next July meeting or webinar, and that will be announced shortly. Thank you so much, everyone. Have a good day.
Thank you very much. Thank you very much. Have a good day.